Hi, everybody. This is the Bitcoin live show. I'm here with the Minotaur team.
Hello.
And hey, everybody. So, in fact, let's introduce a little bit everybody for the people that maybe don't know the show. So, we have Costa, that is the CEO of Minotaur Trading Systems. And we have Marcos. Hi, Marcos.
Hey, peace.
Sebastian, and Giovanni. Um, so the show, we are basically looking at the latest activity um, using our specific tools. That is basically we are looking at the price through our uh, trading view indicators based on the power law. I'm going to share one of them right now. So I call this indicator the bimodal indicator because so we're using uh, relatively sophisticated techniques I posted about in the last few days about this. It's called the Markov chain. It looks like, the blue line is the dividing line, but that happens. It's just a confirmation that the power law, it's a good demarcation between the different behavior of Bitcoin. But really, we trained this tool. It's what that tool does. It identifies states in a system, things that are similar to each other from a probability point of view, and things that are different. You can say, okay, I want to find two main states in this system, and then you will identify these states. Or I want to find three states. Probably it will be better. In fact, I will adapt it eventually to find three states because we do have a state that is a transition between these two, but you can see they are color coded, right? So we call this state below. So it turns out that is also associated with being above or below the power law. The power law is the blue line. The white line is what we call the support line, which is basically identifying all the bottoms is parallel to the blue line. It's about 60% deviation from the blue line that represents the kind of the middle of fair value price of Bitcoin based on the power law. But then you can train the system using this technique. It's called a Markov chain. Um, it's kind of interesting because Veritasium, that is a very nice scientific YouTube channel, just had an entire episode on this technique and how it is applied to so many things. And I posted on my X if you're interested. And so I use the same technique to identify states in Bitcoin. And you can see two main states, this turbulent flow and then the core power law. So we spend about 2 years along the core power law, then we leave it and we go in this turbulent region that is basically kind of like the power law, but is shifty because the mean shifts, the mean value for the power law shifts, but also you get a large deviation towards the right of a distribution, so large values. So these has been something very common in previous cycles. They are all characterized in this way. Few times we added these regions where we were not supposed to have them during the core, but then we quickly we had a correction that brought us back to the core. And it happened also briefly during this time. Probably this was due to the ETFs. The price was pushed up quite a bit. And then this November, we entered the turbulent area. Everything seemed kind of to repeat the same patterns because what we like I say, we see 2 years in the core, then we leave to go to the turbulent region, and we spent 2 years there. But this time something is different because after spending some months, in theory we should have like happened in the past, we should have deviated very much from the power law. Instead, we kind of stay close to the power law, and then in fact we went below, and we enter again this green area that usually never happens during this turbulent flow region. And then we went back, and now we seem simply to oscillate back and forth, moving along the power law. That is strange, for being a bull period. So that is something to consider. And again, it seemed that recently we had this bullish move where we thought, maybe this time we are actually leaving. We are going towards maybe a possible maximum. We discussed this in other episodes. We establish this prediction that is not based on vibes, it's based on calculation. Many people do this prediction based on vibes, but everything repeated as in the past, we are supposed to go towards 200. But this seemed very very a good signs that we are moving in that direction, and now we are simply coasting again along the power law, and we had this recent correction. So it's very confusing, I would say. I don't know how to make sense of this. It seems that Bitcoin seems to be floating around the power law. It likes the power law too much. So that is okay, because if we continue to move along this line, it's fine, but it's different from other bull markets that we had in the past. Let me also share one more graph. I will stop sharing this one. Let me share this one. It is about the global liquidity. It's a long time we don't watch the global liquidity. Just give me a second. Okay, this one. So this is a graph instead about the global liquidity. So we see Bitcoin, the power law, the support line here below, and then we see this purple and green line. So this purple and green line are projections of the expected price based on liquidity. The important thing, so I got from liquidity that is measured in total dollars in circulation into a Bitcoin price, but it's a transformation that should not be taken seriously in terms of the amount, because liquidity is not very good to calculate the precise amount of the value of the Bitcoin price. It's more directional. So are we turning up? You can see it kind of track pretty well, at least some sections. Other sections not so well. Here, for example, went up, and here went down. Many times when people show these graphs, they kind of cut off all the inconvenient parts. But if you want to be honest, you have to show how well they correlate. Now, it turns out I did a little bit deeper analysis. It's about something like close to 70%. 70% of the time when the liquidity goes up, this is global liquidity, the price also goes up. So directionally, it's a good indicator of maybe what to expect over a relatively short amount of time. And it turns out that there is also a delay that is about 81 days. We also find this delay not by choosing some value at random, but repeating this analysis over and over until we got the best possible fit. And this indicator below here shows the winning rate. So it's a way of going from something that is kind of one directional, right, that goes up to an oscillator. So the oscillator here is basically we are smoothing these lines, and the difference between the purple and the green is that the green is just a smoother version of the purple line. And then we calculate how many times we went up relatively to how many times we went down in a moving window. And so that it's a good way of tracking the direction, right, of both quantities. And you can see they kind of follow each other, right? Um, it's more coordinated at the bottom with the tops, but it's it give us some further information. So right now, what we are looking at, right, is that we continue to go up. The two are in agreement. It was a turning point here, and for the next few months, because remember there is a delay of 81 days, we are supposed to go up. Now, to be honest, we see a little bit of a turning down in the global liquidity. Now, does it mean that the price will also go down? We will have to see if this pattern continues for a long time. Then it's possible that after this delay is passed by, so we are talking about all the way to September, then there will be so end of September there will be a turning in the price, but it's not confirmed, right? It will be just temporary, but it's something to notice that global liquidity was moving very, very fast up, and now it's taking kind of a break. But we will see if price follows along. But at least we should see a movement up for quite a bit, right? For at least a few months ahead of us. Okay, so this is what I have to say right now about the price using these indicators. We have many more, but we focus on few of them at the time. Um, okay, I'm going to leave the floor to Marcos with his analysis of a local liquidity instead of a global liquidity.
Okay. All right. Let's see if I can keep the narrative going here. See if we can keep the momentum going. Giovanni calls G Money calls for 3 more months of upside. So let me see if I can back into that. Um, I am sharing my screen. There we go. So I always like to start off with just a very basic trading view chart, and anybody has access to this. And there's some interesting correlations that's going on in the marketplace that's a little bit different than in the past. A little bit different. And what we have here now, let me cut that alert off. That is a large order alert. Let me find that and kill that. It's gonna keep doing that. Let me uh let me cut that off. Give me just a second here. If y'all hear it, maybe you hear it, maybe you don't. Um,
No, we don't hear it. We
okay,
don't
well
hear it.
then it's not bothering. Okay, great. All right, so um, what we've been having is since the institutions have come in here, the ETFs, we're getting a different behavior than we used to get in Bitcoin. Um, we're getting these clear, very clear accumulation zones. These are very clear accumulation zones where we accumulate and then we displace, accumulate and displace, accumulate, displace, accumulate, displace. Okay, so and I love this pattern. I this is Christmas for me. Um, what's so good about this pattern and it's very uniform and it gives you time. This is clear institutional activity. This is how they do it. They don't just so let me just use it as a comparison here really quick. We'll go to the last time we had liquidity. We had a big liquidity zone here, and then we finally broke out of it here. But when we displaced this liquidity here, we basically ripped through it very quickly, which is a kind of an indication of more retail and short-term holders in the marketplace, not so much institution, just driving that particular displacement there. So I just wanted to kind of start by showcasing that we're kind of in a different ball game now. And as far as in my opinion, I don't think it's going to go back. It's just going to become more and more stable. This type of patterns can go on for a long time because it's stable. When it's not as stable, when it rips, it has to correct just about as quickly as it goes up. But these type of patterns here can just continue for a long time. So sticking to the 3 month statement that Geo made, let me add in the going to add in the liquidity now so we can see the context behind the price action. And just for those that are new, we like to use the futures market, the derivatives, because derivatives is the leverage money. Leverage money is a lot bigger, faster. So the bubbles are created and they're also mitigated fastest in derivatives. So derivatives is a price discovery engine. So that's why we use it. So let's put in the liquidity. Here's all the liquidity now, so we get some context to the price action. I like to keep things extremely simple but powerful. As we can see, we are clearly displacing this short side liquidity, which are basically, these are shorts here. This is a short pool. This short side liquidity has been building since December of the first of the year. And it's an enormous pool of leveraged positions in the perpetual market. We're going all the way from 3, 5x, 10x, 25x, and there's also 150x in there as well. A lot of those have gotten taken out, but that's what's kind of on the table. On the table, 25 to 3. Naturally, when I get on the call, the market wants to move. As we can see right now, it's actually moving. So let's take a little bit closer look at the real time movement that we're getting. I'm just going to drill in here. Yeah, we're actually taking out some concentrated 25x. I'm getting, my speakers are going off with all kind of alerts right here. It's going on right now. We've been kind of going at this all day, so we're actually moving into this pool. So now that I'm here, I'm going to highlight a very simple fundamental basis here. These guys down here, these are longs that have been entering in positions ever since we got into this consolidation channel for 2 weeks. These are long traders that have been trading 25x positions. So they've been trading in here, and their stop losses, drawdown exits, and liquidation levels are in these pools. So as you can see, they've been steadily getting larger, the composition, and more dense, ready to harvest. So the simple fundamentals behind this is these are forced, when these price hits these positions, these are going to be forced sellers. So these people are going to be selling low. They're selling low. So then these forced sellers, so what the institutions do, they grab this liquidity here, and then right up here, these shorts, same thing, people making bets on both sides. These shorts are forced buyers. So the institutions are buying low, selling high. The retail, small traders. Now, when we say small traders, this is James Nguyen. He's throwing $100 million a trade around. So you can have big retail traders too doing the same dumb things. So they're selling low and buying back high. So it's a simple business model. It's incredibly simple. If you have just a little bit of insight and a little bit of patience to go with it, you can do the same things they do. That's what we do at Minotaur. We trade market maker business model. We use a market maker type of algorithm, and we harvest like they harvest. We grab these positions down here because the way I look at it, this is discount inventory. If I go to a store, I want to buy things. I go to Costco or Sam's. I don't know where you live, but when you go to a wholesaler, you want to buy wholesale from these guys who are going to sell it to me. And then I already know these guys want to buy. They're already waving, hey, I want to buy it. I want to buy it at 124. So I'm going to come down here and buy it at 112, 110, 115, and sell it to these guys at 121, 124, 122. I mean, how easy is that? The key is you don't want to trade in here. You want to take the liquidity like the institutions do. That's what they're doing. They're moving from one side to the other. So the beauty of this is a lot of retailers, they get bored here. Oh, the market's not doing anything. It's not going anywhere. And they want to move when it's doing that. That is the absolute worst time to get in the market. That's when you close positions out. So when this market finally gets ready to impulse, we'll close out and we'll do it all over again. So just want to throw that little side note in here. Let me get back on track where the market's going. So I'm going to put the liquidity back. What's interesting here is because the institutions are consolidating as long as they are, this consolidation is actually a great thing, and I'll explain why. You can see right here, we had this new, what's called new organic liquidity. This liquidity came in from this consolidation period that we've been in. We've kind of been in one big consolidation period, other than this very short displacement here. We've been consolidating, but what that consolidation is doing, that's growing this pool bigger. So if we didn't have the consolidation, this isn't an extra 10%. This is 10%. So this consolidation is creating, well, from back here when we first started consolidating, it's creating 10 extra percent. Why is that important? It's important because, and now we're getting this little baby addition here. So we're already up here now. Now we're at 154. So trying to get some confluence to what Giovanni's saying. So now we're talking about the this will eventually grow in. This will pack in. So we're at 152 now, 153, 154. Then we put an additional 20% on top of that for the discovery of the new range. Uh, it's up here at about 180. So I'm helping you out, Gio. I'm gonna get you there. So here we go. So we're talking now price discovery. Where here's a new range, price discovery 180, and then a new pool gets created up here. So you're at 200 now. So I don't know how it happens, but it always seems to work out in the end. We need this to create the liquidity to fuel us up to where we need to be. Before we had this consolidation period, we were here. We're at the 130s. Well, now we're not quite there yet. We're building it in. We're building in all the way up to 150. It's going to build in. So there's the 150. So that's why the liquidity is taken in zones. This is 1, 2, and 3. This is 3x here. This is all 3x, 5x, 10x. Well, I messed up here. It's actually, this is 3, 5, 10, and 25. There it is. So all that's necessary to get us to the 200 that we're looking at. I'll just show you for context. Let's go back and look at the last displacement we had. This was in 2024, where we didn't have the institutions to add. It's like the institutions are adding buoyancy to the ship, the ballast stones. They're giving it buoyancy. When we rip fast like this, we didn't get that liquidity growth. You see how it's just flat here? There's no additional growth because it moved so fast that you just only got this tiny little bit right here, just that. So compare that to where we are now, because the institutions are consolidating more and accumulating more. This is gold right here. This is the most valuable thing we have, because this is creating all of this right here. It's giving us that. So now we have the fuel that we need, the locked in, trapped sellers. I mean, trapped buyers that we need to get us up there. Somebody's got to buy all this stuff here. Yeah. Somebody, you have the institutions right here adding to their positions. They're going to sell to these guys. It's already waiting, cash in hand, locked in, fried chicken. So I think that's very promising, that we have a very clear path to getting us way, way up there. We're talking, I see 150 already on the board. Yep.
Yeah, I would like if we went in that red region before going down again. Um, Mostly because I have some open position there to sell.
You want
But with
to,
about,
you,
yeah,
you're here, you're right here.
yeah. This is what I would like. Yeah,
Yeah,
we're going there, but
we're going there. Yeah, well, you're in
yeah.
good shape. This is just a level two. If you think about it, it makes sense. If you have all of these buyers concentrated in here, you need to pick up a little discount inventory so you can sell it to them. If you go up
Hmm.
there too quick, you don't have anything to
True.
sell. Remember, the
Yeah,
market makers got to balance out their
yeah,
books.
yeah,
Yeah, yeah,
yeah. We tried to do that in the last few little
yeah.
dips, but
They,
it was
they,
not enough, good enough. Yeah,
they did it right here. They picked up that inventory there. They picked up
yeah,
inventory here, sold it to these guys. Now they
yeah,
got to pause. That's billions of dollars. They got to pause on that. Pause, pick up a little bit more, sell to
yeah,
these guys. Then we get up here. We'll do it again until we get out of here.
yeah. I can see
Yeah,
that.
yeah,
Very good.
yeah. All
All
right.
right. Okay. And what about Sebastian?
Yes, hello everyone. I'll go ahead and share my screen and I'll give everyone some insight into what
the algorithm has been doing over the course of the last week or so. Just let me know when everyone can see.
Let me see it. See you.
Okay, cool, perfect. Well, welcome everyone. For anyone new that's watching the show, I'm the CTO of Minotaur Trading Systems, and I'm just going to be giving you guys a brief little overview of the algorithm that we've built, its capabilities, and kind of what it does trading live price action. I've also got a free indicator loaded on the chart, which is just a free open interest futures liquidity indicator on TradingView, which gives us a rough idea of kind of where the liquidity levels are sitting. And as we can see, just like it was seen on Marcus's screen, we just had a big wick down that took all that liquidity out, and now we're on the way back up, which is usually what happens. So we've got an algorithm that is built to trade Bitcoin, and different things, it's important to understand that you can use this algorithm as a way to simply generate passive income for yourself or generate exposure and yield into Bitcoin while significantly minimizing the risk. Now, you can do this trading Bitcoin against USDT futures contracts to receive profits in USDT. You can also collateralize your Bitcoin and use that as a collateral, meaning you can gain USDT profits from holding your Bitcoin without selling your Bitcoin, which is something that's very, very unique. Now, the way we do this is it's a consultation service that we give you alongside the algorithms, and we will show you how to do everything. So if you're someone who doesn't have a lot of experience in the market, it doesn't really matter too much. We will basically hold your hand and guide you through the process of running the algorithms and getting them set up. Now, let's take a look at how the algorithm actually trades, because this is really important. What we've got here basically is live 15-minute candlestick data on Bitcoin's price. And as we can see, we've kind of been trading in this range over the last week and couple of weeks, right? So we're kind of just moving in this range. And as Marcus just showed, this is essentially just the market gearing itself and preparing for the next kind of leg up, which is exactly what it does, right? We need to move sideways to consolidate, and we need to move sideways to prepare for the next leg. But what's really cool about the algorithm is, especially if you're someone who's just sitting there holding Bitcoin, the psychology plays a big factor. And a lot of people go, oh, this is so boring. Bitcoin's moving sideways. This isn't fun. Well, I can tell you, for anyone that runs our algorithm, it is exciting for us because we have the ability to generate yield when Bitcoin isn't really doing much. And I think I want to show everyone how this works because it's very important. The algorithm is not just built right for trading up. It's actually designed to have most of the profit when the market is falling. So it is profitable in every single market condition, but it really favors selling pressure, which is something that's very, very unique because most algorithms fall apart when the market turns bearish, whereas ours actually shines in those moments. But let's get a look at what the algorithm's actually doing so we can get an understanding of why this actually works. So we'll start from the left hand of the screen here, and we can see that the algorithm takes a long position. The cool thing you'll see is that these liquidity pools are basically concentrated futures positions, and when price touches these levels, people are actually getting liquidated. So something that's really unique about what we're doing here is we're actually buying into the liquidations. We're not fearful, and we're not putting ourselves in a position where we're at risk. We're actually essentially buying the areas that the liquidations are occurring, which puts you in a huge advantage to essentially gain yield, right? So we took our first position here. The market moved against us. The algorithm didn't worry about that, right? It has no emotion. It doesn't sleep. It doesn't worry about what Bitcoin's price is doing on a day-to-day basis, right? It removes all of that. And when the market moves against us, we're not fearful because we're excited to pick up more positions. And we make another buy here, we make another buy here, we make another buy here. And that puts us in a position for when the pump does happen, we're able to exit our positions in a profit. And as it always does, the key principle of mean reversion, when price reverts, eventually it comes back. And as you can see, price increases, we take our profit. And that's it. So during this period, believe it or not, in between this small, tiny price action between 120 and 117, the amount of liquidations occurring are gigantic, right? So what most people don't realize is day traders struggle to trade even, 5 to 10% ranges without getting liquidated, where our algorithm really is shining in these kind of moments. Now, if we have a look at what else is happening, the algorithm essentially waits, makes its next buy, and we have a similar situation play out once again. The market moves against us. This time it's pretty violent, but it's important to see what's happening because there's this huge pool of liquidity here. And what's the algorithm doing? It's not getting liquidated. It's picking up more positions. We buy more. We buy more. We make our last buy essentially at the bottom of the liquidity after it's already been taken. And now we know the algorithm's in a really good position to take profit. Price bounces back up as it always, and we close all up as here in a profit. So what you're seeing is the algorithm able to trade when the market's going up, able to pick up more positions when the market's going down, but more than anything else, able to execute at a high level without worrying about whether they're going to win or lose the trades. This is the most important part to have success in this market because essentially our emotion is never going to allow us to be profitable. Now, as we come across, this is an example of the algorithm taking a long position, market moving favorably upwards, and us just closing. So as you can see, when the market goes up, the algorithm is not stressed. When the market goes down, the algorithm is not stressed, right? And I want to show you a trade here once again. When the market goes sideways and is ranging, when not much is happening, this is another really key important thing of what the algorithm does well. It's not thinking and getting bored in these sideways price actions, right? So most retail traders are trying to highly leverage futures positions and just getting stopped out, stopped out, stopped out, stopped out. And it doesn't work, right? Whereas the algorithm is always patient. If the market's moving sideways, it doesn't care because it knows there's going to be an opportunity for it to buy again at value and exit its position. So in my opinion, impatience and kind of, feeling like the market's boring or not doing anything, this is just emotions that are going to cause you to lose your trades, right? It doesn't actually really mean anything. Now, the market has a big sell-off, takes out this pool, we go long again, right at the bottom of the pool, the market runs up, we close our position at the top of the pool. As you can see, the algorithm stopped taking buys here. If you look what's happened now, since this point, we've had a 3.2% dump and the algorithm has not entered again, right? So this is very unique. It's waiting because the technicals are telling it that there's more selling pressure coming. And as you can see, it made the right decision because any regular standard maths-based algorithm, every time the market has any form of dips, we'll start buying, right? We'll start buying. But our algorithm's not doing that, right? Because it's got self-built intelligence that understands when to buy and when to sell. So it's very unique. So, anyone that's interested in an algorithm that can completely remove the emotion from their trading, put them in a position where they can get realistic, long-term, sustainable gains. This is what we're about at Minotaur, right? We're not about get rich quick. We're not about over leveraging and having high liquidation levels and doing degen style trading with meme coins, right? We're about building sustainable algorithms that can trade Bitcoin now and can trade Bitcoin for the future, for the next 10, 20 years, as long as we need to. So anyone that's interested, please book a call with our team. Happy to talk to you for free. It doesn't cost anything, and we'll run you through the whole system. Thanks, Giovanni.
No problem. Thank you so much for your great explanation. Costa, do you want to add anything to this?
Yeah, can you hear me?
Yeah, perfectly.
Yeah, just a bit on that. Like with the tools that are available to us, especially with the exchanges that we're using and a lot of our clients are using, it makes it very exciting because we've got, we're kind of like supporting two teams, right? It's like you're at a soccer match and you want both of them to win because most of us are using Bitcoin because we're using Giovanni's algorithms in order to know where we are in the cycle. So when we're below the power law mean, we're accumulating Bitcoin, and when we're significantly above that, we'll rebalance. So half of us is wanting the Bitcoin price to go up, right? We're cheering it. We want it to go up. We've gotten to go up, but when we deploy the Minotaur algorithm, it's actually, which is so counterintuitive, we actually make less money when it's going in a straight line up. We want the market to be volatile, right? Because what we're doing essentially is capturing volatility. That's what our algorithm is doing. It's capturing that volatility. And when the market's pulling back, counterintuitively, we make more money, because what we're able to do is we're able to accumulate a larger position over time. And then where Giovanni comes in, the missing piece of the puzzle, is we're calibrating everything off the power law support, which statistically is a range that has never been broken. So putting all that together, it makes it interesting, like in a time like this, because I'm actually really, really happy that we're actually breaking down 115, 114, looks like 112, 110. Because I'm just going to accumulate a bunch of positions, and my overall bias is bullish, especially at this point in the cycle, as we can see from what Marcus showed us. But why not increase my position size on the way, increase my total profit, because the volume of my trades are going to increase. So basically, it doesn't matter what's happening here. Ultimately, I'm going to be having a larger position, more profitable positions, and then I can buy more Bitcoin, which is what we're all doing. So from a Minotaur perspective, the volatility right now, it has been a bit boring. But what's boring? Like 2 weeks, really? Today we sign in and the market's, it's got a little candle like this size. It doesn't take very long for something to happen. So, as much as we'd like the price to be 180, 200 tomorrow, I think Marcus is right in saying that the smart, I guess Giovanni says it too. It's like, we don't want things to go up too fast. It's not sustainable. You don't want to be on something like that. So it's looking good. And if you want the tools that we're all using, including Giovanni's indicators or the Minotaur algorithm, we're here to help. We're here to provide them to you. So, book a call with either one of us. That's all I wanted to add today. And one more thing, actually, I will share my screen, because we do track these algos, and I'll just give an update, because we just did a trade while we were talking. So we'll show that as well. I'm going to let that screen share go through, Gio.
Yeah.
Yeah, you can see here that this was just bought just now on the price. So, while we're literally talking, I'm now entering my third position. So you can actually see what's going on here pretty easily. This orange line is yet to drop down, I think, because the timing is just it's like literally just happened right now. But that average, the orange line is our average price, which is called the WAP. The green line there is that TP line there. And I'm now into my second safety order. That's what we call them, safety orders. So the first one was initiated here at 117. And we just placed a trade here at 114. So like Marcus was saying, we're operating like the market makers. The market makers now looking to buy these levels. And that's what we're doing. We're doing it in a mathematic, using a very precise mathematical deviations and really systematic execution. So all this is handled completely manually. So this all was executed while I was talking to you guys, which is really cool. And I think that Marcus's phone pinging this whole time is probably a bunch of other bots that have entered positions, right?
Yeah, I guess. Yeah, they're coordinating with me. But hey, I'm at Costco right now, man. I'm picking up some wholesale Bitcoin. So, see y'all at the wholesale store. We're picking it up right now.
Yeah. So I don't know, from our perspective, I think things still look good. Things are on track. Nothing too out of the ordinary. I think once that price gets to that 140 to 160, the conversation will start to change a little bit, though, because those prices, as the prices do get overheated, I think that the chances of severe corrections become possible. And then we need to start, really considering what we're going to do differently. But I think that's a conversation for maybe September, October, right, Gio?
Yeah. Let's get up there.
And you guys want to answer some of these questions?
Yeah.
Let's go through them.
I think 110, it looks like.
Yeah, at the low. 110, 112. 110, 112. 112.
Maybe a wick down to 109.
Could. There's liquidity. We see a lot of liquidity down to below 112. It's sitting at 112 now. So yeah, you can probably get a crazy wick there.
What you have to understand is that look at the 3x leverages. So what we're chasing now is the 25x leverage positions, right? That's what the market makers are looking for.
Right.
The real magnet is those 3x pools
Which are
above.
way up there.
That's not going to allow this price to get too far down. It's not going to chase no liquidity. It's going to chase where it is. So
Right.
it's only doing what's going on right now is very, very short term. It looks like it's chasing those huge liquidity pools. And just think about it, right? If you had people on your exchange that are constantly making 100x, 25x leverage positions, as soon as the price goes up, they enter these super leverage trades. If the price just went up forever, everyone's going to become a millionaire overnight, right? They're all going to be doing 100x. They're going to make big as a trade, and no one gets liquidated. Everyone takes profit. So just think about it, right? Everyone knows that Binance plays this game.
It has to distribute. It has to distribute the money. Yeah.
Correct.
Yeah, that's right. There's a reason that it cascades from the highest leverage to the lowest leverage in that order, right? That's not like happening at random. It's by design. That's what the futures market actually is.
Correct. And the futures market now we're starting to really see that we're spending a lot of time investigating this. Is the price discovery really is happening in the futures market, and then it's reflected.
It does. That's where and the spot corrects to the futures. If it gets too much of a disparity, then the big institutions will buy or sell the spot to arbitrage it back in.
Yeah. All right. Next one, Gio.
Yeah. So this is for me. Any update? Well, I'm talking about it all the time. Look, this is how it works, right? That prediction is based on everything happening exactly like the previous cycles. And we have repeated many, many times that we are not repeating the same cycle. We are doing something weird. It's different. Now, why that is different? I don't know. It could be that it's because of ETFs. It's because of Sailor or whatever. It doesn't behave like, at least, not the power law, because if anything, the power law is becoming stronger. So it's not something, like, oh, okay, the power law doesn't work anymore. No, it works too well. That is the problem. We are following the power law too much. Usually the bull is when we deviate from the power law. It's the exception, and then we correct it ourselves and we go back to the power law. This time we are, even during the bull market, we are too close to the power law. We are not leaving the power law. I said this many times, as we come closer to end of the year, the possibility that we go to this 200K that was calculated based on the patterns from the previous cycles becomes less and less likely. And just to answer also the following question, because you have this why people make their name unreadable, why we try 5RC. I can't, like a bunch of random letters. I like the guy because he's always following us, etc.
Yeah.
Hey, that's his wallet address, Giovanni. He wants you to make a deposit there.
Okay, yeah. He's one of our friends, so I'm not trying to make fun of you, but I cannot read your name. I call you YV. So YV. So to follow in the same line, and this is kind of actually a general analysis or general comment on all these people that make predictions, right? There are two types of prediction. There are vibe prediction, where they are worthless. I don't know, right? They say, oh, and this happens also on some of the magazines, Bitcoin magazines, or some of the shows, etc. Oh, we talk with Michael Saylor, and he makes this prediction. We talk with Tom Lee, and when you ask them, how do you arrive to this number? It's a story. They make up a story. There is no really any analytical method, right? In our case, we follow an analytical method. Now, is it a guaranteed that because we follow an analytical method, we are going to reach that value? No, but at least the logic, right? Which logic we follow to arrive to that. And then given the premise, if a premise don't hold, then the conclusion doesn't hold. But at least you are consistent, right? It's not something that is made up out in the air. So we know that things are not going like before. there is still a chance because Bitcoin can do crazy things and catch up and go all the way to 200K in few months. It's not completely excluded, but anything else after that, it becomes a guess. So it's not because we didn't have a peak in the end of a year like we did all the other time, but now we need to have it in the beginning of January. Now we need to have it in the middle of 2026. No, because once we don't see the pattern that we saw before, it becomes a guess until we have enough information, maybe another pattern established itself, and then we can use that pattern to make prediction. But right now, if what happened in the previous cycles doesn't repeat, that doesn't give you leeway to say, well, then this other thing will happen. You don't know because there is not enough information. It's like we started from scratch. The only thing that we are left with, it's the power law, because that has not been violated. That it continues to be a backbone for our analysis. But the cycle analysis, it's up in the air, So all the people that talk about an extended cycle, they are making up. We don't know. The only valid and sincere and honest answer is that at that point, we don't know. We simply don't know. Okay? That is how it should be approached, this new uncertainty that we have. We don't have cycles. It seems, if anything, that the cycles are not there anymore. Or at least they are not pronounced as before.
And the people that are trying to pretend they know when they don't know, they're calling themselves cycle agnostic. But that just means that they're not willing to say they don't know. They're just creating a fancy word for it.
Right. So, and I mean, look, even my prediction of 200K was based on this idea that the peaks are going to decay. And I got a lot of pushback when I did this calculation, because there were people saying, oh, we go to 400, oh, we go to 1 million, all kind of bullshit stuff like that, right? They were saying within this year, right, we were going to 1 million. Can you imagine? It's ridiculous. Now, if we don't even reach 200K, okay, I'm not saying, I don't think it's boring. I mean, Bitcoin is Bitcoin. Is not going to have these crazy bullish periods. Now, these bullish periods, I don't know why people felt we were so exciting, because, okay, yes, they're excited. Maybe they bring in new people because we see all, but the expectation has always been one. Very few people had the expectation, oh, we reach a peak and then we have a correction, right? Some people expected that and took advantage of that because they can sell high and buy low. But the majority always thought that we will going up, right? That now this was the new way Bitcoin behaved, that we were going to continue this crazy behavior at least for a long time, right? Because people still buy on the top. That means they are expecting the price to go even higher than that, right? That what happened every single cycle. Very few people had, the insight of understanding that this was not sustainable. They sold and then they bought at the bottom. Unless you are one of these few people, yeah, it's boring, but also, we're talking about money. We're not talking about going to a roller coaster, right? If you want to have the kind of fun and adrenaline, go, to some kind of
Vegas.
to kind of roller coaster ride, and have fun there. We're talking about a serious thing. So actually, to be honest, maybe it's a good thing we don't have these crazy bubbles anymore. We have plenty of volatility. You can watch
Plenty.
it now. Plenty of volatility. It's just that now you have to be a little bit more clever on how to use it, right? And this is why these tools that we are developing are very powerful. You don't need to have to be honest, actually probably they became even more powerful, because if you had imagine we have a correction downwards for 1 year, right? You can use our tools, but you always count on the price recovering a little bit, right? But if we do that all the time, right, we go up, we don't need a lot of ride. We don't need to go up for a long time. We just need to do it for a little bit, where we take gains, and we do this, repeat, and already show I didn't include. I did a calculation. I show these graphs. I share them some time ago. I can share them again. Let's see if I can find them. I already calculated that if you use some of anything, in fact, I left it where I didn't care how you do this, but if you find a little bit of, let me see if I can find the graph that I want to share. If you find any way of getting these graphs, if you find any way of getting any type of stop screen sharing, screen share here. So if you find any way to get any type of yield on Bitcoin, and you can do it doing maybe cover calls or whatever, you are going back to the behavior of Bitcoin of several years ago. So what these graphs are showing, I'm showing here what are the expected returns over 1 year for the future. So it's this line here that you're seeing here, and you see there the black line is the real data. They are oscillating, with peaks and lows because of the bubbles. They are here when we have a bubble, you have a huge big returns. There are years where you have a bottom, you make, basically you are in a loss. But you can see the blue line, that is a power law. It's a good representation of the average return over the years. And you see it's going down. It's kind of flattening. It's never going to flat completely, but basically it's going down slower and slower. It's going down, but it's also going down slower and slower. The bigger, in the early days, it was going down much faster, right? So it's kind of almost stabilizing. And this is the projected gains in the future. Now, what I did here, and you can see these are projection for the future, right? So I'm focusing on zooming in this projected area so you can see it better. So the blue line is what we are expecting only if you hold Bitcoin, right? If you are hodler. And here I did only a 1.5% yield per month. That is very reasonable. You should be able, even if you don't know much about options, you should be able to do that relatively easy with cover calls. But you can also use our bot, and our bot is doing very more than 1.5%. But just to be on the safe side, I use 1.5%. Now, what happens? Well, you go from a 45% return this year to almost a 60% return. And, basically, this is almost like you're going back and getting the returns of Bitcoin. I didn't calculate it yet, but let's say 5 years ago, 6 years ago. And so you're going to stay. In fact, it will take all the way to 12 years to not even go back to where we are right now. So for the next 12 years, you could have gains that are the gains that you had up to 10 years ago, 5 years ago. It's really crazy. And when you compound that, right, we're talking about a way of multiplying your Bitcoin. Basically, in 12 years, you could end up with 5 times more Bitcoin than you have right now. Imagine that, right? Without adding any money, just by using your own Bitcoin to actually produce more Bitcoins, by doing any type of yield with any technique, including our bot, to multiply. So it's not going to be boring. It's going to be, I would say, more reliable, if anything. And with money, again, it's not. We are not in this because it's fun, right? We want to. It's a much more serious and important mission. We want to be free. That is the goal. We want to be free. And so, if something is more reliable and more precise, I rather that than having all kind of anxiety, about the price going up and down and doing crazy things. That is not the goal. And guys, you want to add any comment from this about this?
I think it's really cool. I just think it shows you how you can almost go back in time. If you have the right tools, you can get the gains that you might have missed out on many years ago if you joined Bitcoin early. So this is the opposite of boring, in our opinion. But
Yeah.
each their own.
Yeah.
Yeah,
People have
let's not forget Bitcoin's been moving up since 16K. It's nearly 10x.
Yeah, me
It's
and
been
Sebastian talk
exciting.
about this all the
Yeah.
time, and like, what was it 18 months ago? Was it 16K? Was it even that long ago? 2 years? It's like it's wild, and this is just the last phase now. So yeah, this question here, because it goes in. I have a good analogy for this too. You're saying the target of 500K to a million is even possible and B2C struggle. So this comes down to, like a good example is around 15 years ago.
what lens are you looking through? What
Yeah,
scope?
exactly.
If you're looking
Yeah,
at a
we are,
magnifying
we are
glass,
going there. We are going to reach 500K. It's going to take years. It's not going to happen.
Correct. Yeah, but he's saying like because I'm just reading the next questions. So what this is like I remember about probably 15 years ago now, I went to buy a house somewhere in Melbourne, and we went to the auction, and I remember that the asking price was 600,000, and it went for 800,000, and it was just like, wow, how much that house went for. If you went to buy that house now, it would be at least $2 million, and I reckon people would think it's cheap at $2 million. It's the same thing about Bitcoin. In 10 years' time, 500K to $1 million for Bitcoin is going to be cheap. That's because of the way that the money piles into the economy, right? So everyone knows this, especially if you're from the US, the UK, Canada, probably in Europe as well. Like everything is going to go up because of the way the economies are structured over time. And with an asset like this, 500K eventually is going to look cheap. Just like that house that I looked at the time sounded expensive at 800,000. And you'd sell the clothes off your back to get it for 1.5 million 5 years later, 6 years later. You know what I mean? So I think it's just about changing your perception of basically how the economies work. I don't know. Do you guys want to add to that? Do you agree to that?
Yeah, I just want to add that it is not moving slow. It is moving incredibly fast.
Almost too fast.
We're sitting on a planet. I don't know what it's revolving at. I think our planet's moving like 24,000 miles an hour. We can't tell it's moving, but it's moving.
Yeah.
Bitcoin is moving at light speed. You need these 2-week corrections because that gives you a chance to go to the pawn shop, sell off some of your old vinyl albums, your sneakers, gun collections, whatever it is you need to do to get liquid and move your money from your fiat bank that takes 7 days plus 3 and all that crap to get it into the cryptoverse and buy some Bitcoin. That 2 weeks gives you just enough time to go break your piggy banks and get all your money rounded up, and just like the institutions, and get your positions so you can make life-changing money. So it's moving. Actually, for me, it's moving too fast because I'm trying to shake every tree I got and rake all the leaves and get it out of fiat in here. But it takes time to do that. So it's giving you time to build your position so you can make money. Life-changing.
I want to add to that. The silliest thing is to want this, and Giovanni's. I think this is one of the reasons why I got so attached to Giovanni's work when I first discovered him, is that you want this to go slow. Like if this happens too quick, your opportunity, the average person, not the Michael Saylors, but the average person's opportunity is gone. If this goes to $1 million in the next 12 months, your chances are gone. It's game over, right? You've missed out.
Yeah, it's getting away.
The fact that you have the power or trend, that you have the volatility, that you have the corrections, it's a beautiful dance. And all you need is enough time, like Marcus says, is to figure out how you can take advantage of it. The worst thing you want is this to play out too quickly. So I can't stress enough, like you want these resets to happen. You want the cycles to continue. The cycles are the cherry on the cake, right? Because if you can have a massive correction, it really does give you the opportunity to increase your stack. One of the only ways to really, really do it, the way that we do it with the trading, you can also do it. It's a lot more predictable, but it is going to be a lot slower. The biggest gain that can be made is if you sell at the top and buy back at the bottom. Now, again, the bigger position you have, the least likely you're going to do this. Like if I had 1,000 Bitcoins, I'm not going to sell all my Bitcoin at the top and buy back in at the bottom. But if I only had half a Bitcoin, well, I don't know. I'd probably take that chance because that half Bitcoin could then turn into 1.5 just from that one move. So everyone's at different levels, and I think one of the issues that this space has is people even at the lowest entry level are copying the strategies of people at the highest level, or they're thinking that those are the best strategies to be using. But it's like, no, they work because they're at that level. You need to do what works at your level. So all we're trying to do here is pull together the best tools available, volatility capture, and then also power law growth, and also, which Giovanni is, just presenting the possibility that cycles in the past have occurred, and if they tend to continue, this is what they're going to do. But regardless of that, we have the power law core, and the support.
And one other thing, Costa, did we mention, or Sebastian, we also have the ability to mine Bitcoin by doing an inverse, where the algorithm can actually work like a miner and make Bitcoin for you. Yeah, we haven't talked about that. Maybe we'll talk about it. Maybe we can cover it next week.
Yeah, for sure.
Yeah, I'll do a presentation next week on the show, and we'll show how to trade inverse contracts, which is basically, we'll dangle the carrot a little bit, but it's using your Bitcoin to mine Bitcoin without the cost. So we'll show that next week.
no ASIC miners in your garage, overheating your house, driving your loved ones crazy. No big facilities. You're mining Bitcoin with an algorithm. That's just mind-blowingly insane. So if you use your Bitcoin as collateral and you mine Bitcoin with it, you're triple dipping now. So we'll give you a triple dip of ice cream next week. Stay tuned.
Yeah. Did we answer this question here from Brent? Giovanni, do you want me to answer that?
There's a lot of questions here.
Okay, I'll do a couple questions in a row because there's a few. All right, so what is the best legal trading platform for a US citizen to use? Okay, so really good question. So as of right now,
Coinbase.
The futures landscape is rapidly changing inside the United States. We've started to see the beginning of futures leverage perpetual markets opening up for cryptocurrency, and they're going to be done on Kraken and on Coinbase. So as of right now, those two are in the midst of rolling those contracts out. They've actually started. So definitely this year, that's going to be a go. I think even now, if you're really set on keeping your money inside the United States, which I completely understand that position, I think using Kraken and Coinbase is completely fine. Kraken has, to be honest, much better fee structure than Coinbase. It's significantly cheaper. And if you're going to trade spot, I would recommend Kraken over Coinbase. But definitely both those exchanges are really good. And they're both going to be rolling out 24/7 style perpetual futures contracts this year. So it's an exciting time. Yeah.
Yeah.
Marcus,
okay.
Maybe you want to answer this? I don't know.
Okay, let's see what it says.
Marcus question.
Do y'all have insight in why? This is from Boyvo. Okay, Boyvo. Do y'all have insight in why the price didn't go further into the short liquidity? There was only one move into it rather than two or three. Well, it's not over yet. Yeah, the market is very, very good at showing you an impulse in the opposite direction. So it's not over. It's going to come back for that third pass. We're in our second impulse. So there's another one to go. It's not over yet. Stay tuned.
Don't let the market makers get you, because what they'll do, and this is an answer for why as well, don't get frustrated, because like if the market goes down and you start getting bearish on Bitcoin, or every time it goes up you're bullish, that's a really bad position to be in. You want to have confidence in it and not let your emotional capacity get affected when the price dumps, because that's how they get you. And that's why retail traders lose. So, you just have to have the mentality that you're in the right place, you are early, we've still got time, you can do this, and don't freak yourself out, because the market will do that to you really, really easily.
It's built to do that. All right, next,
this one.
Yeah, we said that 109, 110. There's no way it's going much below that.
Yeah.
Okay, freedom. Yeah, this is the main ultimate goal, right? Freedom.
Yeah.
Libertà.
Good word there. Good word.
And that comes down to, I think
my favorite word is the highest word of all, because if you think about if you are not free, you cannot do anything, right? Probably alive, you need to be alive. Alive is the top of the top, and then you need to be free, because if you are not, then life is meaningless.
Yeah,
Yeah.
that's the point. Yeah.
That is the point. Thank you to answer all our questions. Yeah, you're welcome. I continue to ask. We appreciate you.
All
And,
right.
and yeah, just a call out, if you want to book a call with our team, go to my X channel and book a call. We do free demos. It's a no-brainer, really. We sit here every week and we talk about these tools, and we're using them. This is what we use our money on it. We put our family's money on this. This is a product now that has been shared publicly in the Telegram groups. People are posting their results on the Discord channels of Giovanni's. People are posting their results. This thing works. So, if you're on the fence and you're thinking about it, have a demo, speak to our team, and just join the club. I think we've got one of the best systems around.
Yeah. And this one, maybe I can answer a little bit because I have a little experience. It depends what you want to do. Like, for example, and I imagine you mean IBIT, right?
Yeah.
Bybit is the exchange, and so IBIT is the IBIT. He corrected himself. So IBIT is basically the ETF that is locked to Bitcoin, right? I studied it. It's almost like Bitcoin, there are slight differences because Bitcoin is traded on Saturday, on Sunday, it's traded during the vacations. So they are almost identical. The advantage of IBIT is that if you want to do options, like in particular cover call, it's relatively cheap to buy IBIT because it costs like $6. So you can buy a relatively easy. $60. $60 you can buy with $6,000. You can buy 100 shares, and then you can do cover calls with that. So it's a way of being exposed to Bitcoin and at the same time having the liquidity of a stock market, and that is amazing. So that is, I will study all these tools. I will study all the different things that people are doing. In our Discord, for example, we had a lecture from a very successful member that is doing about 5% a month. He's doing 5% a month with options, okay, with cover calls. It's incredible, and he's a very clever guy, but he explains step by step what he's doing. And I'm going to do some videos, and share on X, because look, while we would like you to use our system because this is what we use and we work, and we would like to help people. We want all Bitcoiners to be successful. So personally, at least, I don't care if you do one or the other or both. You can do actually both. You can.
We do all of them.
We also do the same. We ourselves do some of it. So I study all these tools that 5-10 years ago they were not there. They didn't exist. So study them, learn some from people that are successful. We are trying to do courses, we are trying to do videos, we are trying to create a community. If you come to my Discord group, we have an entire channel where we discuss how to do options, etc. So I like IBIT for that reason. In fact, I like it better than MicroStrategy strategy. And even if some people, if you want really to push it, some people like to trade strategy options because we have even more let's say volatility, and so but I will do that once you learn how to do it with IBIT. So IBIT first and then do that. But of course the ultimate goal is to own Bitcoin. So these are all tools to have more and more Bitcoins, right? So eventually you want to sell your IBIT. I will not keep IBIT forever because it's still linked to the traditional finance world. But it's a gateway, right? It's a way of doing certain things that you will not be able to do with Bitcoin. You can do options with Bitcoin directly, but you have to be in Europe. For a US citizens, it's easier to do it with IBIT versus doing options with Bitcoin because you have more limited options. So there are a lot of tools that they didn't exist before.
All right, one last one here with Richard G.
Yeah.
He said he's on the fence. I'm just gonna say, Richard, we got a spot right here for you on the bench. We're waiting on you to get in the game. So we'll be here.
Yeah.
Mhm.
And yeah, I can add to that. Like, you know, we charge a fixed licensing fee, and at the end of the day, like if you know, when you go into a trade, this is the kind of, this would be a perfect trade, right? A perfect trade, if you're discretionary, is what's my fixed max loss and what's asymmetrical upside. In other words, I know how much I can possibly lose, but the upside is asymmetrical, right? It far outweighs it. So the cost of the system, the licensing fee, right? That's really the maximum that you're putting at risk. But the potential upside of this algorithm working in the way that Giovanni's saying and we're saying is that it's perpetually going to give you a volatility capturing machine in perpetuity, right? So it's an asymmetrical return for you there. So if you're on the fence, that's all you got to consider. It's just a logic. Just look at the numbers, you know, do your pros and cons and make a logical assessment. On the one hand, all you're giving away is some money. On the other side, what you're gaining is something that can really earn you potentially Bitcoin or USDT for the rest of your life. So, you know, that's the way I would consider it. Do you guys want to add to that at all?
I think you
No.
made a good point. Invest in
Yeah.
the ability to continue to gain. You know,
Yeah.
Correct.
Look, you know, Bitcoin was, it's incredible that we are part of this. Sometimes I wake up in the morning and I think this is science fiction. It's like science fiction, okay? And look, you know, it's not that I have all good memory for Bitcoin. I've installed 35 Bitcoin from me, but Bitcoin is so generous that even in situations like that where you mess up, and it was my mistake, right, to lose this 35 Bitcoin on a exchange several years ago, they were hacked. It's still the most amazing financial opportunity, not of your lifetime, in history, in the entire history of
human
mankind.
history. Yeah,
In the entire, there is no such a thing. There is no anything like this. Okay, and the fact that it's actually stabilizing and still having a lot of volatility is really the best of both worlds, because we know where it's going. I mean, more I study, like I posted yesterday, we did this presentation, we are talking about the principle of least action, okay? Studied it when you have a chance, but I'm trying to demonstrate that Bitcoin, with this power law, is really equivalent to, you know, when light goes through glass, right? For example, it follows the principle, it always follows the principle of least action, but the reason why it bends is because it's minimizing the path of going through the glass. This is what nature is doing. And Bitcoin, following the power law, is minimizing the action of his price movement. And so it's actually the best possible path for Bitcoin. And it's incredible that it's doing this, that Bitcoin is behaving like nature. You know, it's just crazy. Having an asset that is growing in a very predictable and following the path of least resistance to the goal. The goal is 1 million, 10 million, you know, being basically the alternative monetary system of the world. That means it will need to be equivalent to basically half of the wealth in all the earth, or maybe all the wealth in the world. With most of the earth in the world will be concentrated in Bitcoin. One day, it will take 20 years. So you have something like that, and you're participating, and you are like 1% of mankind, you know, very little percentage in mankind. They maybe heard about Bitcoin, but they are not doing anything with it. And you are here, you're listening to these videos, you're learning, you're participating to all this, right? And on top of that, you have this volatility that you can use. It's almost like the waves in the ocean. You know, you can propel things, or the wind one of these solar wind farms, right?
Well, that's what they say. Bitcoin is energy, right? So
it's energy. We have this energy source, and we can use it to propel our machines, you know, and we are going places. So it's really an amazing opportunity. It's just a question of, you know, maybe 10 years ago, 15 years ago, you could buy Bitcoin all these years, and, you know, and you don't have to do anything else ever, But remember, 15 years ago, 10 years ago, it was not easy. Very few people could do that because you had to have the insight, you had to have the courage, you had to have the guts to do that, all the luck. And some people did it. They play with Bitcoin like if it was a toy, and they sold it at $10. They sold all their Bitcoin. They maybe bought it at 20 cents, and then they sold it at $10. They made money, but now they regret it. So you are an amazing spot where you get basically the best of both worlds. You get this still very, very strong volatility and this long-term trajectory that is predictable. So use this opportunity, right? Learn, work hard, learn about Bitcoin, learn about how to use all these tools.
Let me answer Dan right quick. There's a late question here.
Then we can conclude.
He said, then we can wrap it up. He said, question from Marcus: do you think we will grab the liquidity below the range of 106 before moving up to the next level? Good question, Dan. You're awake. You're not asleep. From a probability standpoint, Dan, we have moved into a displacement. We have broken out of a previous range. That 106 was in the range that was established 6 months ago in the summer. Fall. So we're out of that range. We've broken out of that volume profile. So to go back to the 106 would be putting us in that previous range. So the probabilities are we're not going back to that range. Plus, before it broke out, 106, that pool, that 25x pool that you're looking at, was the support for the breakout. So my argument is, if it didn't take it then before it broke out, why would it take 106 after it broke out? The probabilities don't make sense for that. We're probably just going to scrape this pool here down to 112, 110, and then continue on our journey higher, probably.
And maybe I can answer this very quickly, and then let's wrap it up. So, and of course, everybody can say something. Look, I own, for example, MSTY, right? And I kind of like it, but I bought a little bit because
this is high yield savings account, not MSTY.
Okay. High yield saving account.
That's just a high yield bank account. That would do like what? Right. I don't know, 8% a year, 6% a year.
Yeah. No, in that case, I was thinking that he was suggesting some of these yield tools around Bitcoin. I misinterpret what that HYSA means. But it's even a better case with MSTY. I will say almost the same thing. The main good thing about, first of all, of course, the yield in this case is much higher, right? I say you are not going to get the 1.5% that I mentioned. Now, you can still get 8, but 8 is nothing. So at that point, we are not even in the same plane that what we are discussing. But anything else, right, it's not really relying on Bitcoin itself, on the natural Bitcoin volatility. You will need to rely on some tool, on some company, on some organization. Of course, you could say, well, I'm relying on Minotaur, but really our algorithm, once it's set, it's doing things that are robust, are very simple tools, like Italian cuisine. Italian cuisine is not complicated. If you go to some of the best restaurants in the world with the Italian chefs, their ability is to make things as simple as possible, but balancing it so well and so amazingly that it becomes a form of art. Okay. And this is why it's so amazing, because it's not complicated. There are no complicated procedure to make things. It's just the perfect balance of ingredient. Same thing here. We are not doing anything special. These are all tools that people used in the past, so are tested, are tried, etc. Besides the power law. The power law is a new element that we don't have. But even that, how it works, how solid it is, etc. We are just putting it together with the right balance of imperfection of execution. That is what we are doing. And that it's robust. It will work, is working now, is going to work in 5 years, is going to work in 10 years, is not going to be limited by anything, right? So all these other attempts, you're going to have a limitation, like MSTY, for example. We're saying that we're so successful in what we're doing that is mostly these covered calls, that actually they started to run out of liquidity. They didn't have enough liquidity. So many people join in that now, so I don't know if they will continue to do this, 100% returns that they are claiming they are doing. And also you need to look at the book. Are really they doing 100%? Is there something else going on? Where here you get, or what you see is what you get. Okay, and you see it every single day. You open your chart, you see exactly where the algo bought, where it's sold. Everything is clean, open, and the results are spectacular.
Let me give Richard a nugget here about convincing his
Go on,
partner.
do it.
That part. The key, Richard, is not to convince your partner. It's actually to build your case on things that are not refutable, right? So your partner knows Bitcoin. Your partner knows the power of the economic system. Your partner knows where all the big trends are going. So you don't have to convince your partner of that. So then it just becomes now, what is the alternative? What is your partner got that's going to be the alternative to where things are going? Once you break it down like that, the clear things that are happening in our world, then it becomes very clear this is what you need to do, because your partner then your partner has the burden of, okay, I don't like what you say. Well, then what's the alternative? Create a new business, open up a real estate, flip houses. What are we going to do? So there's no better alternative. So then now what we do here at Minotaur is just a tool to do the inevitable. There's a lot of ways to do it. We just have a tool. So you're just telling your partner about the inevitability that's in front of everybody. Everybody and their grandmother knows what's happening. So there's nothing to sell, nothing to pitch.
Yeah, and a high yield savings account, the returns will be negligible after inflation is factored in, firstly. And secondly, the reason they're willing to give you that money in the first place is because they've got a better idea. They're taking your money and paying you interest because they know how to make more money. Right?
They're doing this.
They're doing this. They're just not telling you. It just looks like you're putting in a bank account, getting high interest. They're using strategies that are sophisticated, that are making them more money. That's why they're willing to pay you a high interest. If you're willing to give me the money, I'll pay you a high interest and I'll put the money into Minotaur myself and I'll arbitrage the return. So, the answer is that this alternative is something that puts you in the driver's seat, right? It's giving you the opportunity to have an asymmetrical return that's going to outpace inflation and not be giving away money to the traditional players that are just going to go and do this stuff with your money anyway. That's the reality. Is they got some way to do this, right? They're just going to do it with your money.
And while we are not, I hate when I'm trying to make some important decision and they get pressure, by anything. I don't like that. And we are not trying to do that at all. But at the same time, I always warn people. I just demonstrated to you, right? If you look at these, these return charts, 10 years ago, it was obvious that Bitcoin was doing much better than it's doing now, right? And these returns are going to diminish. It's going to flatten out, but they are going to diminish. So it's also a question of, focusing on one goal, having the discipline, and doing it as soon as possible. You need to feel comfortable. You need to analyze all the pros and cons, but it's fundamental that you start this regime for your future, because when people say, oh, we are early, we are few. That I agree with that. We are still few. The people that know all these, we are elite. We are elite, not in terms of privileges. We are elite in terms of our working hard in understanding Bitcoin, and we get all these incredible, returns from our interest, our focus, our studies. But we're also fighting against time. Time is not our friend here, right? Time is your friend when you join, when you start to work hard, whatever goal. So it doesn't have to be Minotaur, learn how to do options, learn how to do whatever. But use this opportunity because it's not going to be there forever. We have a relatively short window of opportunity, maybe the next 10, 15, 20 years. And then that opportunity is going to go away. In 15 years, they seem a long time, but it's not, So decide to act and in particular, if you're a young person, train yourself. Think about this as your mission in life. To be free, to be independent.
Yep. You're welcome, Richard. Use that alternative.
Welcome. See you on the inside, Richard.
Okay.
All right.
All right, guys. Hopefully, all this has been useful, and we will be here next time. We are going to be here with you, and let's see each other next Thursday, same time, same place. Bye, everybody.
See you next week.
Thanks, everyone. Thanks, Giovanni.